Hey everyone, the S&P 500 just hit an all-time high yesterday, and it's tough really buying any indexes right now. It's tough buying big tech because everything looks pretty expensive. You're pretty much buying at all-time highs. Now, statistics do show that if you just bought the S&P always at all-time highs, your investment is doing amazing because it just continues to hit a new all-time high every year, which is crazy. But in this video, I have some stocks I want to share with you that are at great buying opportunities. Even though the S&P 500 is at all-time highs, some of these stocks aren't, and they still have incredible fundamentals to where I'm literally about to pull the trigger on this first stock right here. It looks like a very attractive stock, and if it doesn't impress you, feel free to hit the dislike button. So yeah, if you like this stuff, hey, help me out and drop a like on the video for me. And this first stock I want to go over is actually ticker symbol PGR Progressive Corp, and you guys won't believe how impressive this stock is. So Progressive stock is actually down 3.4% on the day, and if we go to year to date, they're still up 5% year to date, but I believe this company's at a pretty attractive valuation right now, and here's why. Again, Progressive is that insurance company. You've probably seen some ads for them on TV with Flow, but it's for this reason right here. The earnings yield and the free cash flow yield. This right here, if you can understand this, this is incredible. So if you look at like a money market fund, a CD, you get about, 5.5% of your money back every year from like a CD. But basically this company right here, if you bought the entire company, let's say you owned every share of Progressive, you own the entire company, you would get 5.87% of your money back in after-tax net income. And I'm kind of trusting, Progressive to reinvest that 5.8% net income themselves and get a higher return. And also the free cash flow yield, you get 10% of your money back every year just in free cash flow, or at least for right now. So here's the incredible part. The PE is pretty cheap. It's a 17 PE, and the forward PE is a 15, which means they're expected to keep on growing their net income. And this company does have a low dividend yield. If we look at the dividend yield, it's a 1.94%. It's actually lower than that because they actually just did a special dividend. So they normally pay out only 10 cents every quarter, which is nothing. But every year in January, they do a special dividend. Check this out. If we go to last January, it was only 85 cents. But look at it this year. It was $4.60, which is actually, yeah, like I said, a near 2% return, which is crazy. So since the normal dividend yield is so low, they're able to do these special dividends and really reward you as a shareholder if you just buy and hold them for the long run. Maybe you could trade this one, buy them in January, and hope for a nice little special dividend. All right, so I want to show you something on my phone really quickly. Here's Progressive stock price. As we can see, it's not at all-time highs right now, so it's at a pretty fair valuation, down 3% on the day. And, they're an insurance company. And look at this, personal lines are 81% of the revenue. And look at this annual revenue growth. I mean, this is why Progressive is one of my top picks right now. The growth, it's up 23% year over year on their personal lines. And that's literally 81% of the business. So 80% of the business is growing like a maniac. Also, if we look at their next biggest segment, their commercial lines, let's see how that's doing, because why not? Yeah, look at that annual trend. I mean, that's what you want to see in a company. So I love the growth here, and also the bottom line. I didn't really show the exact numbers, but revenue's up 18% year over year to $20 billion. But the net income, look at this net income. This is crazy. They're literally making $2 to $3 billion of net income every quarter now. And then, of course, they do these special dividends sometime. They did a huge special dividend in 2020, another $4, and 2021 is $1.80. So yeah, Progressive Corp, I think, is going to be a winner in the long run. And that's just one you probably just want to buy and hold for the long run. Don't really sell out of that company unless, the thesis really changes there. But this next stock I want to share with you is another one I kind of just loaded the boat on. I bought a few more shares of this stock, and I own them here in my Webull portfolio. And this is ticker symbol FUTU. This is FUTU right here, and this is actually a Chinese company. So I will say that you want to be careful. They are Chinese. But the reason I like this one is because of the growing fundamentals, and they're now doing these special dividends, kind of like Progressive. So FUTU just did a $2 special dividend, which basically gave you close to 2% of your money back. So I expect them to continue these special dividends. And if you're wondering what is FUTU, that's actually this app that I'm using right now. They're a brokerage. So this app is literally called Moomoo. If you kind of look at the top here, it's called Moomoo. And then if you look at the top left, it says FUTU. The name of this company is Moomoo. So it's literally just this app I'm on right now, publicly traded. And let's go look at the valuation. I really love the fundamentals here. So and I might be a little biased here. This isn't sponsored, but if you want to download this app with my affiliate link, we'll both actually get some free stocks if you sign up with my link in the description and deposit $100. But anyway, this company trades at a 20 PE, a very low valuation, 20 PE. And here's the best metrics. I mean, we can see their total number of users. This app now has 26 million users, up 17% year over year. We can see their total client assets are at 106 billion. So they have a bunch of assets under management. I kind of like how they give us some of these metrics right here. We can, anyway, this is what's crazy. They have huge margins. So look at this right here. The revenue's up 82% year over year. Very nice growth, very incredible growth, up 82% year over year. But look at the net income. It's up 108% year over year, and it's 275 million. And this is in US dollars. Even though this is a Chinese company, we converted it into USD. So if we go to the net margin right here, this company literally has 45% net margins, or at least in the most recent quarter. The margins grew 15% year over year. So they have incredible net margins. Also, so they get revenue from brokerage commissions. Check this out. That's up 111% year over year. And another half of the revenue comes from their interest income. So check this out. They're making a boatload of interest. That's what's so cool. If you have a lot of cash right now, you take advantage of the high interest rate environment and collect a bunch of interest income. And this company is up 53% year over year, 266 million. So anyway, I really like this company for the net income. If we go to the EPS right here, it was $2 in the most recent quarter. Like I said, yeah, they're trading at a 20 PE, and they just paid out a dividend. Let's see, the dividend was $2 a share. So literally, they could easily afford to continue to pay out at least $2 a year in special dividends. I believe one day they'll just pay a normal dividend. So that's what's really cool about FUTU stock. And look at that. I kind of earn interest right here as well using their app. If you look in the middle of my screen right here, I have $950 of cash, earns a 4.10% APY. I'm sure they also make a little bit of APY on my cash because I'm holding it. But yeah, again, if you want to get this app with my affiliate link in the description and in the comments. But yeah, let me show you this next stock right here. And this is one of my most recent purchases. It's actually my most recent purchase in terms of my newest position. It's a stock you've probably never heard of before, and you don't want to have this as a huge position because it's a $1.7 billion company. But I want to give you a pitch for this stock. Again, nothing in this is financial advice, but this is a $1.7 billion company, and the profits had exploded. And I literally just bought this stock, what was it, 4 trading days ago. All my shares are here. I bought them when it was at an all-time high. And then I believe this is the kind of company to just continue to hit new all-time highs. Look at the PE, trailing 12 months. They're trading at 21 times net income. So pretty fair valuation. Yeah, this is what the best part is this net income that they're making. Check this out. They're easily making, and it's going to grow. Look at these year-over-year growth rates. It's up 168%, but they're going to be making over $100 million of net income a year, which is crazy. And we can just see the revenue's up 42% year over year. Net income's up 168%. They're growing their margins. Cash from operating activities a little choppy because of their business. But check this out. Here's another thing we got to look into on the financials right here. And I think this will really impress you. So if we look at this company's cash on hand right now, they have $50 million of cash. It's on the very left there. So this company has $50 million of cash and also inventories of 116 million. I'll sometimes add that to the cash, but we're not going to do that here. Let's just say they have $50 million of cash. If we look at their total debt right here, notice the trend. It's only 111 million. It's down 20% from the previous year. So they're paying off all their debt right now, which is a great sign. Since they don't pay a dividend or anything, they're just like, hey, let's pay off all our debt. So they only have $100 million of debt left. They could easily pay that off in one year of net income, easy. And look at their diluted normalized EPS. This is what you really want to look at. It's the EPS is up 170% year over year. I mean, this is incredible growth. They're finally starting to return some real profit to the shareholders. So, yeah. And also, they're not diluting you. They're not buying back any stock either because it's tough buying back stock. They're kind of returning money to the shareholder by by paying off all their debt. But look at the total common shares outstanding. There's 23 million shares. You've only been diluted 0.1% year over year. This company doesn't dilute you. So that's the great news about ticker symbol PSIX. They're just relying on their own business operations. To fuel the business. And there's been so much organic growth. And that kind of is explained in the stock price. I mean, look at this. The stock went from, a couple dollars now to 74. So again, with these kind of riskier positions, small market cap, you cannot have a huge chunk of your portfolio in them, but they're fun to have as small positions, like a SoFi or a Reddit. You keep them as a small couple $100 position. And then if your thesis is right, let them grow into bigger positions, let them 2X, and then don't really sell it because even when they 2X, they're not going to be that significant of positions. That's what I'm kind of doing with some of these stocks like Dave, SoFi. I'm not really selling out of them because they're still not even that significant of positions in my portfolio. So yeah. All right. So I got one more stock I want to share with you that I actually bought 2 shares of today, right before the recording. It's actually one I bought in my Roth IRA, my retirement account. And I will quickly say we've gone over a lot of sectors. We went over a brokerage, we went over a small cap, we went over a large cap progressive insurance company. And now I want to share with you a REIT, a higher yielding dividend name. And this is ticker symbol BRX. This is actually a competitor to Realty Income. And here's what I love about this company. So they just do triple net leases. What's the dividend on this company? Hey, well, look, we have a pending dividend of $2.88, but the dividend yield is a 4.31%, so not bad. And it's the dividend payout ratio is very low for a REIT. And yeah, look at that. I bought 2 shares today, 3 hours ago. So yeah, 2 shares at $25.90. And let me show you what this company actually does because that'll help us better understand what is Brixmor Property Group. Well, of course, they're a REIT, and oh, look at that annual dividend growth. So it's just growing and growing and growing. That's the trend you really want to see. So yeah, 81% of their annual base rent is derived from grocery anchored centers. So most of this company's revenue comes from grocery tenants. Check this out, TJX. If we look at TJX stock, dude, I think they've been like literally one of the best performing companies in the S&P 500. So it's just good to know. Yeah, look at that. It's just good to know that their top tenants are doing good. So their largest 3.3% of the revenue comes from TJX and then Kroger, Burlington. This is another publicly traded stock. I wonder how they're doing. Is it ticker symbol BURL? Burlington Coat Factory. How are they doing the past 5 years? Ooh, so, up only 27%, not great to be honest. But yeah, Dollar Tree is only 1.6, and they got some Publixes. I think this is a very nice asset to own. 32 Publixes. Ross Dress for Less, dude. They got 46 Rosses. You know what's crazy? I think their stock is also done really good, like surprisingly good. Well, actually, yes, I stand corrected. They're not. They're actually not. So I don't know what I'm saying. Well, hey, look at them on the max time frame. But over the past 5 years, I mean, they're only up 45%. Not great, but still, in Amazon Whole Foods, so they got a lot of really nice top tenants, and that's what I really like about this company. And we have a Publix right next to our house. Probably one of these 32 properties, the Publix right next to our house, is owned by Brixmor. There's a huge sign there that said proudly owned by Brixmor. And after reading that sign, I looked up Brixmor and I realized they're a publicly traded REIT. And so I looked them up. And yeah, they're capturing market share from growing retailers. Look, they got some Chick-fil-A's in there. That's actually cool. Trader Joe's, Publix, Shake Shack. So yeah, this is just a real estate investment trust. They do triple net leases with grocery stores. I don't really want to complicate it too much. So yeah, that was the video. I really hope you enjoyed it. If you did, it would really mean a lot if you hit the like button down below. It'd mean a lot. And I hope you have a fantastic rest of your day. My name is Nathan Robert. Leave a comment. I'll respond to all the comments. Let me know your honest thoughts, and I'll see you later.